About a year ago, I started practicing a Bitcoin-related activity that is rarely discussed outside its niche. A year ago, I decided to close the loop on being my own bank and became a lender of stablecoins or crypto dollars. And you know what? My weighted average return rate has been 19.7%. Let me repeat this. 19.7% by lending stablecoins through a free market system between individuals, while having every loan secured with Bitcoin at 140% of the principal plus interest. That means that if I lend $10,000 and expected to earn $2,000 in interest, the collateral in Bitcoin that the borrower had to deposit to secure repayment at maturity was above $17,000. Hola, ¿qué tal? Os habla Lunaticoin y bienvenidos a mi podcast. Sounds incredible, right? That's why I started my experiment, to put the skin in the game before I came here to explain you. And today, in today's talk, I dive deeper into this little known activity by interviewing Ambroid, who has been doing this professionally for the last 4 years. With me, he shares how exactly peer-to-peer Bitcoin-backed lending works, who is on the other side, who is the person willing to pay 18, 19, 20% or even 30% interest on loans that are more than fully backed with Bitcoin, plus how he has managed to improve his returns even when the agreed interest rates were already incredibly high. I believe this conversation will be valuable for traditional investors, entrepreneurs, and Bitcoiners alike, because traditional fiat investors are thrilled if they can get a 10% return on their investments. Meanwhile, here, even the least skilled players seem to be making 15% effortlessly. Then, there are the real estate investors who endure endless headaches from buying and managing properties for, 5, 6, or 7% returns? And that it's using highly liquid assets. Then entrepreneurs too will be interested because, as another guest mentioned in the past, they are starting to consider holding a part of their treasury in Bitcoin. And what Ambroid shares today with me will show the utility of doing so. And finally, Bitcoiners, especially those who dislike fiat yet still using it in their daily lives. Ambroid has some interesting thoughts on the powerful optionality that comes with combining Bitcoin and lending. So, will you join me in opening your mind and exploring this fascinating parallel structure of peer-to-peer lending? If so, here is the pod. I made this podcast primarily for my Spanish-speaking audience. I translated it with artificial intelligence and so on, but here you will find the original version. If you speak Spanish, I encourage you to check out the version that I created 1 week ago, where I take more relaxed approach in explaining how peer-to-peer lending works compared to traditional bank loans. Adventures like this, where I put a meticulous work on translation, voiceover, and editing, are possible thanks to your support on Patreon, where supporters got access to the English version like weeks ago, maybe close to a month even, and also through the value for value contributions received via Podcasting 2.0 apps like Fountain, Noster, or Seed Hypermedia. Thank you so much for that. And of course, this podcast wouldn't be possible without the support of my tireless sponsors, HODL, CoinKite, Bitrefill, and Seed Hypermedia. All of them are Bitcoin-focused companies that I personally use, and I'll briefly talk about them during the episode so you can take away a piece of valuable content about what they do. Now, before diving into my conversation with Ambroid, let me remind you that what we are discussing today is a financial practice. And like all financial activities, it comes with risks. So before jumping in, analyze those risks carefully and do your own research. Remember that you shouldn't trust, and you should verify. And now, down the rabbit hole we go. Hello, Ambroid.
Hello.
Thank you for joining me here in this conversation. We're going to be talking peer-to-peer lending, but before that, I would like to know a little bit more about you. Could you explain me what is your background in relation to peer-to-peer lending?
I'll just start a bit generally. I joined crypto in 2016, like pure shitcoinery. And then in 2017, I really liked hodl news as a source of news. That's since deprecated. Nobody's taking care of that. It was just small blurbs, like very short and to the point news. That's how I got to know Max Kaydun, the founder of hodl, because he messaged me like I was just retweeting these news that they would be putting out all the time. So we started talking. I actually initially invested in Huddle in like one of their, actually the first equity round that they did. That was the absolute top of the market in 2017, 2018. So I've been following what the platform's been doing since their early beginnings, right? And that's how I got into peer-to-peer lending. It was because I was interested in what Huddle was doing, and it's hard to stray from peer-to-peer lending there because all the other options, like we will get into this topic more in depth, but all the other options are just pale imitation, so to speak, in terms of security mainly. So yeah, that's how I got into peer-to-peer lending.
Many of us get to know or get related with peer-to-peer lending, but in your case, as far as I know, you decided to do it professionally. So
Yeah.
how was that?
So it just grew organically. Like that's how it always is, right? Like you just do something and it just starts taking over your time because it's working, and you just focus on it more and more involuntarily, even from sometimes, right? Yeah. So it just kept growing. Now it's like we did it with a colleague with our own money at first. Then we onboarded a partner. You might call it a peer-to-peer lending platform as well, but more from the TradFi standpoint, where they offer investing into private equity bonds usually. So the peers on the platform, the people using it, can invest and take these bundles that they are offering from these various private equities, etc. So we convinced this platform to add Bitcoin-backed lending, so the users can invest into crypto indirectly. So it's like this super safe way of putting your euros somewhere and getting a 10% return or whatever. And on the back end, we would just bundle this money up and use it to lend it on Hodl or on Debifi, right? So we did it with our own money at first, and we add this on top. And now like we've got a track record of 4 years going. So yeah, like we are opening a fund, and we can start doing raising and all this good stuff. So yeah, it just it's organic. It grows. It takes over your time. That's how it is always.
Maybe it's a good moment to, because we're talking about peer-to-peer lending, and you mentioned that you have been doing it professionally for 4 years now. So just to be clear, so what are we talking here when we mention these words, this peer-to-peer lending? What does it mean for somebody who doesn't know what the heck are we talking here?
Okay, so we have this. So right now, this could be mainly stable coins, right? So we have stable coins as lenders. This would be USDC or USDT generally, be it on Ethereum or Tron or Liquid or wherever. We are fairly agnostic. We don't care. And the borrower has Bitcoin. So this would be raw Bitcoin, no wrapped Bitcoin bullshit. This is like actual on-chain Bitcoin that you should be familiar with, right? So you have your Bitcoins, we have our stable coins, and you want to somehow use your Bitcoin. You don't want just sitting in your Trezor or Ledger or whatever, So you go on Hodl or Debifi, and you just look at the offers there. So we have offers up right now ranging around 14 to 16% APR, where on the platform we can lock the Bitcoin in a multi-sig smart contract that's fully on chain, fully transparent, everything's visible, right? The Bitcoin is used as a collateral, every loan is over collateralized, and based on this escrow lock, we will send you the stablecoins for the period that's been agreed upon. Right? It's very easy in terms of the workflow.
So what is interesting of peer-to-peer lending is that there is, of course, two sides, no? And one side has stable coins and wants to lend them. And then there is another side who wants to borrow them. But of course, in normal legacy banking, legacy loans, you would go to a bank, you would give them everything they ask. Where do you work? They will ask you to create an account there. And then maybe they can lend you money without asking you for anything. Sometimes they ask you some warranties that you will not run and never come back. So aside of having your ID and so on, they sometimes ask you, okay, let's put your house as a collateral. Let's put your car or your stocks as a collateral. Okay, and then you can then take the loan that you came here to ask. Great. Here in this case, there is no office of a bank. There is just two people. That's why it's peer-to-peer. So what is interesting to see is that the borrower, before borrowing, needs to put even more money that he wants to borrow in Bitcoin as a collateral, as a warranty. So if you want to take, let's say, $100,000, you have to, that's a lot. Okay, let's put 1,000, let's make it easier. If you want to borrow $1,000, you will have to put, I don't know, like 1,300 in Bitcoin value as a warranty.
That would be the minimum, yes.
Okay, and in between these two peers, there is like a third actor, in this case, like my microphone. There is a third actor that would be HODL. That the only thing that does, if we're talking about lend.hodlhodl.com, what would do is like create this multi-sig. This is strange to compare with the legacy finance.
Well, that would be the contract, right? That the both sides would be signing, and if either side breaks the contract, then a litigator or a lawyer comes in and says, okay, this side is correct and this dispute, it's resolved that way. So in this case, that would be the platform itself, right? That would be HODL or Debifi or Firefish.
Yeah. So from the lender point of view, you can be very calm because before you lend the money away and before somebody can run with your money and you never see him back, this borrower has to put Bitcoin in a common safe. Then once the Bitcoin is granted that nobody can move this Bitcoin without everybody agreeing, then that's the smart contract part of the things, the smart side of things. Then is when you lend the money, when you give it away, not before that, because you know that he will always come, the borrower will always come back to pay you because he left something more valuable there. That's how it works.
Yeah, that's a very good explanation. No, there's like a bunch of nuances in there, but yeah, that's a very good general explanation.
What is important maybe is to say is that it's crazy that it can be peer-to-peer. So just two people involved. Okay, there is not just two people. There is the referee on a football game. It would be the referee. Like there is a referee just checking that everybody fulfills the contract. But there is just two people, and you can be, as a lender, you can be 100% sure that you will recover the value of what you lended. And this normally in real life, first of all, you cannot be a lender because normally this is banking who lends money. You can be a lender in a way when you have money in your account and they pay you like 1% a year or something like this. It's kind of like you're lending the bank your money and they are paying you back very little money.
That's how every bank account should work. And it like technically works. And what you're signing is a contract where you're lending them your money for 0% interest. That's how every bank account works.
This is how bad lenders we are all. But when you think about, no, I'm going to start like a business as a lender, then it becomes fishy because this is a kind of like you leave this legacy banking and you move into the dark areas of the society, where there is these lenders that they work in dark alleys and they charge you
usury.
Yeah, exactly. And they charge you 20% so you have if you want to be a lender, normally, of course, you can lend to companies, and there is, and again, there is a lot of nuance in what I'm saying. But as a peer, as a pleb, you don't have a lot of options. Yeah. But here in Bitcoin, we have this easy possibility. Okay, this is great to know. But what I wanted to ask you, because when you think about loans and legacy banking, you have, first of all, that the price of money in Europe nowadays is 2.9%. The Fed has it at 4.25. But when you think about what people is paying for loans, consumer loans, in Spain at least, are around 7%. You can, of course, you get something cheaper and something more expensive, but loans that you want to buy a new TV and so on, this is 7%. Of course, if it's for a mortgage, maybe it's around 3%. But these are the percentages. Once you go to, for example, LAN at HODL HODL, the first thing that strikes you is the percentages. Yes, you can borrow stablecoins. Yes. But nowadays, today, ending of February 2025, the cheapest you will find is 16%. And this is the cheapest to borrow. So, but then you can get, depending on the amount, you can get to 18, 20%. This is more or less the percentages. So my first question is, this is great, but why do people use it? It feels it's so expensive.
So I'll add on to those numbers. So you mentioned Spanish borrow rates. So I live in Slovakia, Central Europe, and rates here are going to be like 4% for a mortgage, so a bit higher. For a regular loan, it's going to be around 8%. So again, about a percentage point higher. But this is banking lending that we are talking about. There's also non-banking lenders. You have that in Spain, I guess, as well, right? So these are like licensed lenders, and they just don't have a banking license, but they do have a lending license. So those loans are around 13% here in Slovakia and Czech Republic. So that's the rate that you're going to get for a loan that's not from a bank and the legacy system. So you mentioned around 16% for HODL HODL. That's going to be around there, sure. On Debifi, it's around 14 to 16%. And on Firefish, you can get loans even for as low as 10, 11%. The problem with Firefish is that there is a waiting period, and it's kind of black boxy where you don't know when they're going to contact you, that the money is ready. Whereas on HODL HODL and on Debifi, you should immediately or within a couple of hours get a response from the counterparty, from your peer. So yeah, like given this context, like the loans aren't that expensive. On Debifi, you have to go through KYC. So anytime you go through KYC, the rates immediately go lower because it's safer for the lender, so to speak. So on HODL HODL, like you've got the anonymity premium, right? Where a lot of the lenders don't really require KYC or AML from you. And I don't give a shit who you are. Like I can see you have your Bitcoins, so I'm willing to give you money because every loan is over collateralized. I don't have to know who you are to lend you those stablecoins, right? So that's why the rates are the way they are, because the loans are extremely fast. You cannot get such a fast loan from a bank unless they already have a credit line with you, in which case you have different issues. And secondly, there's the anonymity premium. And like when you take those away, like when you go to Firefish with its KYC and waiting periods, then you can get actually lower than non-banking rates, and you're getting close to like actual banking rates in TradFi. And when you go to Debifi, which has no waiting periods, but the KYC element, then you've got like the middle step, right? So I would argue that the rates are not that high.
No, which is incredible, because all this, I have to say that I've been practicing peer-to-peer lending actively for the last year. Again, as you were doing at the beginning with my personal money. And I have been the lender. So I had some liquidity in stablecoins, and I was lending them out. So I have loans even as high as 21%, and not for a little amount. So, and this I've been explaining to normies, and they cannot understand. If they are a little bit crypto, they are telling me, oh yeah, but remember Terra, Luna, these percentages are crazy. You know, when you have above 20%, this is a scam, you will lose money. And of course, they haven't put the time to understand what is the security
That's
scheme.
exactly, yeah.
And they don't understand that I have everything over collateralized, and this is my security as a lender. But this, I want to put it on the table because I ask you, like, somebody can think that this is crazy, but I can say that I was putting an offer. Normally, I put an offer, and for maybe, I don't know now, I haven't put lately, but normally in 1 day or 2, somebody was taking it. So I didn't have to wait a lot. So there is a movement, and I was placing those high interest. So this, my next question would be, as I know that this happens, who is the borrower? Who do you think is the borrower? What kind of people is borrowing? Because normally in legacy finance, people that borrows 10,000 euro is because they want to buy a new TV, they want to pay holidays. Like, who is the borrower in peer-to-peer lending?
I don't know. There was one more point that I wanted to mention with why the rates are as high as they are. So every one of these lenders they're all already onboarded into crypto. So it's a super easy step for them to actually buy the Bitcoin if they want it, instead of holding the stable coins. So there's also sort of an opportunity cost to lending, which you have to factor in for the lender. Like, I don't want to borrow cheaply when I could be buying Bitcoin with the money instead, right? So that's kind of a factor as well. But to answer your question about who the borrowers are. So since we started lending on Debifi, where the KYC is mandatory, like, we don't know who actually these people are, what they want the money for. We don't ask. We don't have to know. But we've noticed KYCs from like everywhere from Bahrain through Europe to USA, right? So like the entire globe is using these. There's a lot of Latin American users on Hodl Hodl especially. So most of the use cases that I would wager they are, like, I don't know for sure. I don't have to know. I don't ask. This is not necessary knowledge. This is like infringing on the privacy of the borrowers. So we just don't ask, right? But for most of them, this is going to be a relatively safe way to leverage themselves, where they borrow the stable coins and they just buy more Bitcoin with it. That's going to be at least a half of the borrowers. A large user base on Hodl Hodl that is using liquid USDT, liquid tether. They use it for arbitrage trading between exchanges that use liquid. So that's going to be another use case where these people are moving around the USDT as a fast option for moving money between exchanges where they arbitrage. Another speculative use case would be, okay, I bought my Bitcoin in November. I need to pay my taxes in March, but I don't want to sell my Bitcoin. I can borrow against it, pay my taxes, and therefore not invoke a tax event by selling the Bitcoin, right? So I'm just putting off the event, and then maybe a year later, according to my jurisdiction, the Bitcoin is like under capital gains tax, so I'm not paying any tax or much lower tax. So optimizing taxes is another huge use case. Then on Debifi, a large use case has been actually financing startups because crypto startups hold Bitcoin in their treasuries and they want to somehow use it to grow their business, right? So that's going to be a huge segment, like business to business lending in crypto, especially Bitcoin startups, of course, but in crypto in general, right? So the first loan that we did on Debifi, and that was the first loan on Debifi itself ever, was to finance an alternative schooling project on Madeira. So these people, they are trying to nurture their children outside the basic normie system, and they took out the loan against their Bitcoin to build this, let's call it a school, right? Just a teaching space for their children, right? And for their clients' children as well. So there's, I don't know, there's bizarre use cases, and we just don't know most of the time.
This is something I was asking yesterday on Twitter. If somebody had a loan and if they had taken a loan in legacy finance in the last month, 3 months, to know which percentages they were paying in Spain. And somebody explained me that, even showed me a screenshot, how they got a loan in My Investor and they were asking above 5%, but because they used as collateral some stocks or some bonds, I don't remember, I believe it was stocks, or indexes that they had in their portfolio, then they had to pay only a 3.9%. So they needed the loan. They wanted to buy something, maybe a car, maybe whatever. They needed the money. But instead of, they look what they had, and they had stocks. And instead of selling the stocks to pay that, then they ask for the credit and with something they have, but they don't lose what they have. They still have the stocks. They still have the indexes. And that's so stupid that it had to be a legacy example to make me understand that we Bitcoiners have Bitcoin. It's not that we don't have, we're just waiting for it to pump. No, we have something and maybe we don't want to sell it. Never. But we have something and we can put it to work in the way that the moment that we need some money, we can just use it as a warranty. And this is something that I know because in this year that I've been practicing peer-to-peer lending, I asked you before, who are the borrowers? And I said, I don't know. Of course, me neither. I only see a nickname. But I have seen nicknames that they keep on coming and they keep on asking similar amounts. When you see that somebody is asking you every month, like $1,000, something like this, and the next month another $1,000, you start to think this person is living on their Bitcoin without selling the Bitcoin.
I'll be honest, I do that as well. So like instead of selling the Bitcoin, I can just borrow against it and just, like a year later, either I pay off the loan or it gets liquidated. And either way, like the Bitcoin, it's sort of an optionality, right? Where if the exchange rate rises significantly, then I paid off the loan with a portion of my Bitcoin instead of just selling it a year ago. So say I borrow against my one Bitcoin, the exchange rate in the meantime, a year later is 100% higher. I pay off my loan with half Bitcoin, right? So that sort of optionality is super nice. But I had 2 comments about the previous point, like even the stock, borrowing against stocks. Most people don't really realize this because it's not something we think about generally, but this is how rich people live. Rich people have their stock and bond portfolios. They don't touch them, and they borrow money against that to live. That's how rich people function. Like, why would you sell your stocks when you can borrow against them? And that's how you finance your living. Because S&P, on average, like it's gonna do like 6 to 8% every year, right? Why would you sell it when you can borrow against it instead at 5% or 3% or 4% or whatever? The portfolio, if it's sufficient size, it is outgrowing your debt. Like you don't have to sell. Like you get to like this inflection point where your money is making more money and you borrow against it and you don't actually make a dent in it, right? And that's like the end goal for rich people. So when you see someone squandering their wealth, they just don't understand this concept probably.
Somebody could say about what you just said is that, yeah, that's the happy path, but there is the not so happy path in which, in the case that we're talking here, Bitcoin, instead of going up, goes down. And then you have a loan that you have to pay 1 year after, or normally 1 year, 6 months, whenever you decide it. And then you have to pay it back. and the Bitcoin that is there, it's not enough, let's say, it's enough, but maybe you had to pay to put even more if you didn't want to get liquidated in the past, no? So let's say that the happy path where everything goes well, perfect, yeah, you can live on your Bitcoin, but also I want to put on the table that it's not always gonna be that way. I don't know if you have some ideas how to not suffer from that.
On that topic, say today I need 5,000 euros. I need them, right? I don't want to sell, but I kind of have to. So it's like this optionality is, it cuts both ways, right? So I have the option to either sell right now and get it in my bank account, or I can borrow against the Bitcoin, put in a bit more in the collateral, right? And risk it, so to speak. So it's the optionality of a year later. Do I have to pay it off all of it, part of it, a tiny bit more? So, that's how it works. If you have to have the money, you have to find it somehow, right? So, yeah, the unhappy path. I don't have a very succinct or nice answer to that, right? It's always the individual decision of why you're borrowing, right? If you have to borrow against your Bitcoin to live off of it, if you have to do that, in which case you probably don't really have any other options, right? Like you are running out of options. So it's, we are getting into this granularity of decision making where it's super individual and we cannot give a good generalized answer.
No, and I like what you said about this optionality. We are getting into the options market. And then in the options market, you pay a premium to have the chance to sell at a specific price in a time in the future. So you pay that premium, and this is more or less this is the percentage that you would be paying extra, because when you want to borrow 5,000, you're going to pay, let's say, a 20% more or a 15% more when you have to return it. So this could be understood as the premium for having this option, because the good part is there is a loan that if you don't want to pay it back, it's kind of like you paid it already, because you have an underlying collateral, and if you don't come back, they will liquidate you. If the value of Bitcoin went so high, you will get a part back. But let's say there is a loan that is nobody's going to come and kill you because you didn't pay, because you already paid. You put already the collateral under, no? So it's kind of like, yeah, maybe you maybe you sold Bitcoin that you decided not to sell in the moment that you needed that money, as you were saying. So it's a nice option. But I would like to focus now, because so far we have been talking about the point of view of the borrower. Who are they? Bitcoiners. First of all, because you need Bitcoin to borrow. Real Bitcoin, not wrap Bitcoin, not sidechain Bitcoin, real Bitcoin. So, okay, these are the borrowers. But I believe it's being a lender is what people don't understand how profitable it is. And somebody can tell me, yeah, but Bitcoin went 100% up last year, and we are talking here 15%, 20%. Okay. But I would like to shake a little bit these legacy investors who are spending, I don't know how many hours on Twitter or whatever the social network they use, trying to find the best fund of 2024 to invest 10,000, 20,000, 50,000, 100K. And to get what? To get what? What percentage are investment funds giving you? Because yeah, sometimes you get a 20%, and this is like a very successful year. And sometimes it was a bad year. We were minus 3%. Okay. So, what is crazy here is that this is a no-brainer. You put your money, you lend your money. Your money is completely collateralized, even over-collateralized, with your interest included. So even your interest is protected, and it's a no-brainer. You don't have to think about it. You will get, my numbers are like last year I made like a 17%, and I am nobody. What do you have to say about that?
Okay, so this is a big topic in of itself. We've been doing this for 4 years, so over 400 loans now. So we have good enough of a sample size where we can judge certain aspects. So the main point I would make is, or rather, a question to you, right, as a Bitcoin investor, is: do you want to hold Bitcoin all the time? Are there points where you would rather sell the Bitcoin and not hold it? And I think most people are going to answer yes. There are points where I don't want to hold Bitcoin, I want to sell it. So lending gives you, again, the word optionality there, where you can sell the Bitcoin and then put the stable coins to use, right? Where you lock those stable coins in, say, 3 months, 6 months, 12 months contracts, and then you come back a year later and you've got from those 20,000 euros, you've got 30,000 euros, right? And you can, rethink your choices and then either buy back the Bitcoin or lend it out again, right? So how is that going to work in reality? So I have those 20,000 euros. I'll put up loan offers on Hodl Hodl for €1,000 equivalent, right? I put up 20 offers for €1,000 each. The odds are that out of those 20 loans, I will do all of them for 20% for a year. Out of those 20 loans, 8 to 12 are going to be returned early, meaning 3 to 11 months from now, right? So immediately right there, I'm unlocking my money earlier. But the way these contracts work, you get all of the yield. So even though someone signed a contract to borrow for 12 months, if they return the loan after a month, you still get the yield for the entire 12 months. This is where the actual money making comes in, right? So on paper, you would be making 20% over the year, right? In reality, it's going to be boosted to 25, 30, 35%. Because there are a lot of users that come in and they're like, yeah, I don't need the money anymore. Can we close the loan, please? And you're just happy, right? Because they are returning the money earlier and you can either rotate it again into a new loan or just buy Bitcoin with it. And this is all ignoring the market conditions. If we factor in market conditions, so in a bull market, there's going to be people returning the loans and then they will want to reopen again because they want to re-leverage themselves, because they want to buy more Bitcoin with the money that they profited from, right? So that's a bull market scenario where you have people returning those loans earlier because they want to speculate more. And then in a bear market scenario, people don't have money to repay and they get liquidated and you get a relatively cheap Bitcoin. So again, your decision is very binary there. Do I keep the Bitcoin or do I liquidate it and make a new loan, right? So like even from a small portfolio management type of perspective, adding lending as an element, as a very simple element into how you are working with your Bitcoin is, I think, super interesting. And it adds depth and it adds a very safe form of generating money. So the lender in a bear market, the yields are the best because Bitcoin can be cruel that way, where a lot of people will get liquidated. So 2022 was our best year because there were a lot of liquidation events. And not many crypto funds can say that, right? Where you're making money every year, but during the bear markets, they're the best years, right? So it's also a hedge, right? Where like even with your private money, you're going to be still making money, even though everything's going down, everyone's bleeding, everyone's complaining, like Twitter is blowing up, everybody hates Satoshi suddenly. And you're just sitting there like, yeah, but with a 30% of my portfolio, I'm still making money. And Bitcoin dumped like 10% or whatever yesterday. We've had a couple of liquidations come in. And those people borrowed just a couple months ago because they borrowed at 110,000 at 70% loan to value ratio. Like the moment the collateralization drops to 110% or 90% LTV, then the contract goes into liquidation. And yeah, like we can just rotate the money again.
I hope you're finding this rabbit hole interesting, one that wouldn't be possible without Bitcoin's certainty machine. Let me take just a brief minute to tell you about two other certainty machines. The first one is the Colcar, where you can securely store your sats. One of the great things about doing custody mentorships with Semilla Bitcoin is constantly testing all kinds of devices, and it's a pleasure to see how Colcar handles everything, whether in the basic or advanced mentorships. Colcars are the kind of device you can start with and grow into because they have no ceiling. If you haven't yet started to secure your Bitcoin properly, I encourage you to check out Colcar by CoinKite. The Model Q is a delight. You'll see. You can find more information in the description below. The other certainty machine that supports this podcast is Lend by HODL HODL, the platform I've been using to lend over the past year. It's a certainty machine in the sense that everything happening there is verified on Bitcoin's blockchain. On HODL HODL lending section, you deal with native Bitcoin. And as a lender, you can verify, for example, me myself, I do it on my node, when the borrower's collateral is deposited and confirmed. Plus, you can download the platform's multi-sig contract to keep a copy. Everything is pure Bitcoin. No Brab Bitcoin on shitcoin networks or anything. Check out Lend by HODL HODL via the link in the description below and stay tuned for the next break if you want to hear how exactly Lend works. And now, back to the fascinating world of Bitcoin collateralized loans. So first of all, aha moment is when you see the interest that people is borrowing and lending in HODL HODL. Second aha moment is when you realize that this is working. It's not that they just put the advertisement, no, but people is taking and borrowing and lending. So this is happening. Third aha moment is what you just explained. That is early repayments. Because of early repayments or because of liquidation. And just to put an example, just if I understood correctly, if you borrowed 1st of January, 10,000 euro for 1 year at 20%, that means that 1st January, the year after, you will get 2,000 euros. No, as a yield. Yes, 20%.
Yes, from 10,000 and it's 2,000. Yes,
correct. But what happens? That's a 20%. But what happens if instead of the whole year, they repay you 1st of July, so half year after only? Because they don't need the money anymore. They don't want to have the debt. People hate being in debt. So they repay. What happens? That you, in this system...
You made the 20% in half the time.
You still get the 2,000. It's not that you get 1,000 then. You get the 2,000. Yeah. So if you think annually, how much was this interest? This was 40%. Yeah? So this is what you just explained, and for me it's mind-blowing. And you can get that because of early repayments, or just as you said in a bear market. And I never thought about that. In a bear market, so people get liquidated, and then you are getting repaid earlier. The difference is that you don't get repaid in stablecoins, but you get repaid in Bitcoin. But nevertheless, yes, you have the possibility, as you said, that right away sell it back to stablecoin. No, tax-wise, I think that this is a bit different. You have to have another kind of accounting. But
yes,
but business-wise, it's the same. It's just an extra swap.
So, like from a lender standpoint, I mean, as a user, I sympathize. Like, I actually, like, I got liquidated on a loan. Like, it happens, right? It just fucking happens. Like, you are away from the computer and you're like, okay, we are like 10% away from liquidation. It should be fine. It isn't fine. And I just got liquidated, right? So, because I slept through a dump or whatever. But yeah, like, it happens, you know? But like from a lender standpoint, getting liquidations is super nice. There's two elements to it. It's the early repayment element to it. And secondly, usually after a liquidation event, like when traders or investors get liquidated on their positions, the move is so strong that there's an immediate bounce in price. So even if it happens in a bear market, there's going to be a counter rally. So if you wait a couple days or a week and you just hold your Bitcoin, it's going to be at 10% higher. And then you can decide, do I want to sell it? Do I want to hold it? Do I, yeah. So in terms of like our best performing years, yeah, it's bear market, and it's going to be liquidation events plus holding the liquidation Bitcoin for a couple days. And that's how we like supercharge and optimize the yield.
Yeah. Let's say that in this situation that we did the loan for 1 year, 10,000, and you would get 2,000. If the person gets liquidated, doesn't matter when, what you get in Bitcoin is the 12,000, right? But in Bitcoin value.
Yes. At the current conversion rate. All right. So if we did the loan on the 1st January 25, Bitcoin was $100,000. We did a loan at 50% LTV. So the person would have to put up a Bitcoin worth 40,000 euros into the contract. On the 1st of July, the price has dropped to $60,000 per Bitcoin. So the LTV went to something like 90%. This is like general numbers. It's not exact, right? But that's when the contract enters liquidation. So I get Bitcoins worth $24,000, like if the loan was 20,000. So it's more Bitcoin than at 100K, of course, at conversion rate.
Yeah. So as a lender, you got an option to buy cheaper sats the moment that you lended the money. With that money, you could have bought less sats than the ones that you get when your counterparty gets liquidated. So one could say that if you feel that the market is gonna go down, you should maybe sell your Bitcoin, lend them, because you will stack more sats if, of course, the counterparty gets liquidated.
I think we should touch upon something that's very important here, and it's how to protect yourself as a borrower from a liquidation, right? So on HODL and on Debifi, you have multiple options, two rather. You have two options. You can either do a partial early repayment, which again makes their LTV ratio better, or you can put up more collateral, more Bitcoin into the smart contract. So yes, you can avoid liquidation on HODL and on Debifi. On Firefish, as far as I know, you cannot actually change things in the contract. So you like the terms of the contract are set at the beginning. That's a negative from a borrower standpoint right there. But yeah, on Firefish, like I mentioned earlier, the rates are a bit lower. So again, it's there's pros and cons to each of these platforms.
I love how we're having this conversation because we had a moment for borrowers, but now we're seeing that from lenders' point of view, it's for me, it's extremely interesting. And legacy investors, they should understand the potential that this has, because in a way, it's easy money. If you are already in stablecoins or in fiat, it's easy to convert fiat to stablecoins. If you are already an investor, you're already KYC, you're already working with these platforms that they ask you everything about you before starting buying or selling stocks. So for you, it wouldn't be a problem to get an account in any of the centralized exchanges and get stablecoins. So, and if you are a Bitcoiner already, it's also very easy. You don't have to KYC if you don't want. You know the ways. There is things in thinking about liquid USDT. You have SideSwap, or you have, for Ethereum, you have plenty of places to swap it. No, so yeah, it's incredible. And I would say that for a Bitcoiner, because Bitcoiners says no, but I don't want to have stablecoins. I'm full in Bitcoin. Well, that's a bit a lie, because you have to eat. So you are not really full in Bitcoin. You at least have your salary, no, of the month, or you have something. maybe if you are in El Salvador and you can really spend your Bitcoin in a lot of places, okay, maybe. But most of the people in the world is not living in El Salvador. There is only 7 million people living in El Salvador. Then you will have to have some fiat. And for me, my logic was this last year, I've been living Bitcoin only for a while. And when you start to understand liquidity theory, you say, okay, but I would like to have some fiat for, let's say, 3-6 months. That's going to be my liquidity back. I don't want to be with this, because, for example, if I would be living day to day with my Bitcoin, now that it dropped, what you said before, 10%, 15% in the last month, Bitcoin 20% in the last month, then now that I have a liquidity back, I can live on that liquidity and wait to sell higher or to borrow in another point. So what I want to say is that when I decided to have this bag of liquidity for 6 months, then I said, what do I want to do? I know how inflation works. So do I want to just wait and see that it's losing value? So have a bag of 6 months losing value constantly? And I said, no, I'm going to start creating loans that they maturate more or less every month. So every month I have a maturation date of my loans, and then I can choose. Do I want to use it or do I want to lend it again? So that was my idea. And I think that is not a crazy idea. It's a very normal idea. I have a big bag of testnet Bitcoin because I lost the real one in a boat accident, but I use my liquidity for that. And I think that this is not a crazy stuff.
Yeah, that's how I've been functioning for the past 7 years, with the 3 to 6 months of liquidity. And I've just added the element of borrowing and lending in 2021, right? So it's just rational, right? And I think like all of us are trying to be as rational as possible, and that's why we are in the space in the first place, where you look around yourself and everything is just crazy and irrational. And like Bitcoin, to an extent, even though it's a fucking cult, it's a island of rationality. So you do have to be detached from it a bit, and you cannot just drink the Kool-Aid, because it's hard to live off of Bitcoin purely. As you mentioned, like you run into all sorts of issues, and like, I don't want to sell right now, but I still need to pay my fucking rent. So, yeah, it's adding the element of lending and just generating cash flow for yourself. It's super safe, right? So, out of those 400 or so loans that we did over those 4 years, there's about 8 to 10% of liquidations, and those are the best money makers. And there's about 50% early repayment rate, and there's been 0% failure rate, right? Like all of these loans, like we've gotten money back from all of them, and I don't see a world where that wouldn't happen, because this multi-sig is so battle tested that it's just super unlikely. Like I would treat it likelier that, say, something like Tether would be sanctioned to hell for some reason, like some legal bullshit would happen to the stablecoin itself. That would be more likely than not seeing the Bitcoin that's locked in the collateral, right? So even if such a systemic issue happens where, say, Tether or USDC, they just keel over and die, then there's still a Bitcoin that's locked in those contracts, and the borrower will have to return something. So, yeah, like I'm not afraid as an investor, and that's why we can offer the fund to investors as well. Like it just seems super safe from a risk reward standpoint as a trader, right? So I've started as a trader. I just over time just slow down, and like this is the ultimate slow burn of an investing scheme, where it's this super simple binary portfolio of Bitcoin, and spare liquidity that's being lent out for more Bitcoin, right? Another element that we haven't mentioned is due to the market fluctuations, the lending rate also changes a lot throughout the year. It is heavily influenced by Bitcoin volatility. The more volatile the market is, the higher the rates. They change on a day-to-day basis.
Doesn't matter the direction? Doesn't matter volatility going up or
No,
volatility
the
going down?
direction doesn't matter. Like as long as there's movement, there's demand, right? So say the last year's correction that we've had from 70K to 50K, like near the bottom of the correction, like when we were like in those high 50s for a long period of time, like August, September, they were like the rates went down significantly. Nobody was interested. Everyone was super bored.
Basically, rates go down because nobody's taking loans.
So there's two things I want to mention here. This is on super steroids in a full-on bear market. Like when there's a depression and nobody wants to touch Bitcoin and everyone's laughing at you for being into Bitcoin, that's when you buy, right? That's the sentimental phase. And you're like unsure, should I be buying? Are we going lower? And like everyone's like, no, we are actually going to 14K and we are going to 10K because we're going to 14K. So being on HODL and in the lending trenches, so to speak, like you know that nobody's taking any offers. As a lender, you're just dry. Like nobody wants to borrow anything. Nobody is interested in monetizing their Bitcoin at all. Like nobody gives a shit. Like the volume is super low, the rates are super low. That's when you start buying and you just DCA into Bitcoin, like those spare stablecoins that you generated through lending in the bear market and in the bull market. That's when you fucking deploy, right? And that's what happened in the winter 2022-23, like between $15,000 to $20,000 exchange rate. Like we had 3 months where we had zero loans. Nobody was interested.
And how many offers could you have?
No matter how we lowered the rate, like nobody was biting. Nobody was biting.
And you had plenty of loans. It's not that you had only one or something. No,
like we had, so like we had still ongoing loans from periods before, but we couldn't generate any new loans because nobody was interested.
And how low did the interest went in that moment?
Like on HODL, like you could get sub 10% loans.
Even? Haven't seen that.
Yeah, like single digit loans on HODL.
Wow.
It was, so like that's like a huge signal that you are just getting for free just by visiting the platform, not even trying to lend, but seeing that like these offers don't make sense, right? And there's the other side of the coin where you mentioned it yourself, where you would be lending out for 20-21%. Like that's super high, right? That's kind of a frothy market. Like what was the price of Bitcoin at those rates?
60 something.
So that was like we were pushing into the previous all-time high for the first time.
I think it was because we were the 58K gang, no? So we were like oscillating this amount. And I think I believe it was beginning of summer. So maybe not even 60. But it was a moment that it was 60 something. I remember.
Yeah, so I would say that's 50, 60. So that's going to be like May, June. So yeah. So that was the top of the range that we were pushing into the previous all-time high, around 60, 70,000, right? And then the correction in June and in like throughout even September, like that was a point where we would be getting our first liquidations, like that push into those low 50s from the 70s. Like we would get that was the first time we had a bull time liquidation ever, actually. Like in general, liquidations only happen in a bear market, but the corrections have been deep enough this bull market to get liquidations.
This is also something else very interesting from peer-to-peer lending is the information that you get from the market. So you can,
yes,
of course, signals are signals, but you at least been in this market for 4 years. You have been able to time the market just by looking or by seeing how loans
Yes.
were happening and how the rates were
Yes.
being placed.
Like it's not precise. Like none of this shit is precise, and anyone who tells you they know precisely what's going on, they're lying. But you get a very good general vibe, you know. And like when you pair it with how everyone's behaving on social media, and you look at the chart, I've been living off of technical analysis for years. That's my bread and butter, right? But lending has added such a strong supporting element to it. It's like you get a confluence of signals where the market is telling you it's super fraudy. You might want to sell a bit of Bitcoin, hedge yourself, lend out the stable coins that you got for say 3 months, and you'll see maybe we will get a correction and the counterparty will get liquidated, and you're like, oh, okay, I just got cheaper Bitcoin in 2 months or whatever. So this would be something that would happen to you right now if you lent out. Like if you sold above, say, 105,000, like there's people getting liquidated right now as we speak. Like overnight, they get liquidated, right? So my wager right now is I am long Bitcoin because we are going to correct back into 90s. Like this is something that usually happens after these liquidation events.
Which is the highest interest rate that you have seen, or in even that you have?
35%.
35?
Yeah, we had loans at 35%. This was the top in 2021.
So, like what, in November?
There was like 65,000. The exchange rate was $65,000, and we were lending out like it was like bread with hot butter. Like it was super easy to lend out at these ridiculous rates. And then when we broke out in 2024 above 30,000 for the first time,
yeah,
you could get like 28% out as well. And like retrospectively, you would make more by holding Bitcoin. That's a caveat that I have to say, right? But that's the optionality of things. And the reality of things is as well that those people that borrowed that 30K, they came back at 60K or 70K. They wanted to renew the loans, make new ones, and a bunch of them got liquidated in low 50s. So there's two sides to the coin again, right? Where the people re-leverage themselves a couple months later at 2x or whatever, and then the market actually catches up to them, and you're left with more Bitcoin. And in the end, like it would be the same as holding the Bitcoin throughout the entire thing, but you just made it, and you just did it in a super safe and sure way instead.
I mean, there is opportunity cost, and this is something I calculated in this loan, for example, that we're mentioning last summer, last June, because it was not a small one. And I was considering, like, should I do it or not? What about the opportunity cost? I had some liquidity, but I had to put some extra, so I had to sell. And I was thinking, will I need this liquidity? It makes sense in my thesis. I say, okay, makes sense. Maybe I will get liquidity for 7 months instead of less, no? So, okay, let's do this. But I was seeing, and I was, at 100K, I thought like, yeah, this, thinking about the price of the Bitcoin that I could have bought when I did the loan, it was not a good business. But time in economy is very important, and you cannot predict the future. And what you are doing with this lending is avoiding risk. So when you hold Bitcoin and you're living again, as we said, on your Bitcoin, you have a risk, constant risk, that tomorrow you will buy less things than today. You have the opposite also. But with this, nowadays, I think that Warren has a shitload of liquidity just waiting, and people is saying that maybe that means that he foresees a crisis. and he wants
around
to see
400 billion, yes.
yeah, just a little amount of 400 billions. No? So I believe that if you are this kind of people that wants to sit on liquidity because you feel that bad things gonna happen, you can start using that liquidity. Of course, then you wouldn't be sitting if you are lending it out. But the good part of HODL is that you can lend it as little time as 1 month and maximum.
So can I give a different perspective
Sure.
on that the loan you mentioned, right? It's 60K. So what you're getting for sure is 20%. And in the meantime, Bitcoin has gone down minus 20% from there. It has gone up plus 70% from there, and currently is plus 40% from there. So that's what you're seeing in terms of what's happening, right? So it's the sure 20% versus this extremely volatile, could be a bunch more, but it could be a lot less as well, right? So locking some of the money down in these contracts, and again, you can spread it out, do 1 month, 3 months, 6 months, 12 months, whatever type of length you want, and you just generate a cash flow for yourself. And the only thing that could happen is the cash flow gets forwarded and it's returned sooner, so you're accelerating the yield. Generally, there's no negative event for you as a lender. As a borrower, yeah, sure, price going down is a negative event, but as a lender, everything that happens to you is net positive, essentially.
Ambroid has lent at 35%, huh? That's crazy. Are you interested in a tutorial or a guide covering everything we have discussed here? I'm thinking of publishing something soon on my Seed Hypermedia blog, but if there is something specific you would like to know, I would love to hear your thoughts in the comments or on my Telegram channel or through value for value messages. Whatever I publish, it will be on Seed Hypermedia, as I mentioned, the place where the mind lives. A space where you can create, share, and build community-driven knowledge in a 100% decentralized way. You too can start now your blog on Seed Hypermedia. And if you are feeling inspired, you can turn it into a full website whenever you want. Plus, right from the start, all the posts can have value for value enabled. Just activate it in the settings, and you will have an account ready to receive your first sats for the content you create and share. If you haven't checked it out yet, take a look at lunaticoin.blog. Everything you will see there is built with Seed Hypermedia. And follow the link in the description to start your own journey. And then there is Bitrefill, the website where you can buy almost anything with Bitcoin. I'm still living off it. And for example, I'm lately playing a lot to Zelda Breath of the Wild on my Nintendo Switch. And to pay my Nintendo Online subscription, I use Lightning on Bitrefill. 2 clicks and done. Code redeem, and now I can save games across devices thanks to Nintendo Online. But that's not all. There are tons of services available like Amazon, Zara, Carrefour, or Zalando. And guess what? You can also pay them with stablecoins, maybe even the ones you just borrowed on Lend by HODL. So check out the link in the description and explore everything Bitrefill has to offer you. And now, back to the numbers Ambroid has achieved over the past 4 years. Also incredible. I would like to close asking you if you have the numbers of your performance considering these early repayments, liquidations, and so on.
Sure. Yeah, okay. So I have them in my head. I will tell them, right? But with the caveat that the liquidity is better now. So you cannot expect such high numbers anymore because as more people join this peer-to-peer lending, there's more pressure, right? Essentially, it's getting industrialized, right? There's large funds joining Debifi. There's even going to be banks joining and lending out on Debifi. That's not going to be happening much on HODL because HODL is strictly peer-to-peer, mostly non-KYC. It's going to be customer to customer. Debifi is going to be business to business, I think. But yeah, like over these last 4 years, we've done 30 to 50% every year.
Again, 32 to
30
50?
to 50. Yes. So 2022 was the best year. That was 55% performance on that year. And then 2023, 24, that was the bull market, right? So we've done above 30%, like 33, 35% per year. This is like super stable. Again, the only caveat would be that at the bottom, like instead, we couldn't lend out the money. So like the volumes were super low at the complete bottom. But throughout the rest of 2023, like the volume ramped up significantly, and in summer 23, like the volumes were insane because people were realizing we are actually going up, right? So like it evened out. And even then, like with the personal portfolio, you are getting this huge signal that you should be buying instead of lending. So I was buying instead of lending with my personal portfolio. Like the difference is that the fund, like the only mandate that we've got is to be a lending fund. Like I cannot suddenly just go and say I want to buy and hold Bitcoin. So like the fund is super hyper focused on just the lending business. It's supposed to be a hedge instrument for say Bitcoin startup treasuries, right? Like we can offer this as a like tailored product where we go, okay, you want a 3-month, 6-month unlock period with a part of your treasury, and we can just manage it for you like super easily. You get steady yield. I think it's super attractive for Bitcoin and crypto startups in general. It's an interesting hedge instrument for Bitcoin funds. It's a very suitable product for most investors in the crypto space, even outside space. Like a regular TradFi fund is going to be amazed at those results, right? So my expectation for 25 and on is that purely through lending, we will be able to generate about 20 to 25% performance this year.
It's, again, thinking about those funds that they have to be analyzing companies and spending many hours reading many papers and so on. This is just very simple, stupid simple.
And it's about communicating with the people, like being nice to them, micromanaging each contract. Like, yeah, there's going to be people messaging you even after the contract's closed, and they're going to be like, do you want to do another contract or whatever? And like, you have to talk to people. Like each loan is going to take at least an hour, right, of your time of talking to this counterparty, and you have no idea who they are. Like their English is often very broken, but like that's a very minor inconvenience in comparison to how many loops people are going through to maybe get a return, right?
Mm-hmm.
This is what we are doing is super steady.
I want to say that we have been talking about placing offers to lend. And when you place an offer to lend, you have to wait that there is some borrower that wants to take it.
Yes.
But there is also the opposite. There is offers of borrowers
who
are willing to pay less than the market, let's say, or less than if now at the borrower, well, I mean, the market is where the offer and the demand is met, no? So it changes. But in the lending offers, nowadays is 16%. But for the borrower's offers, which is interesting because you don't have to wait. If you're a lender, you check the borrower's offers and you just click accept. And this is happening already. You don't have to wait. Of course, they pay you less. How less? I would say that for low amounts, below 10,000, you are at 10% right now. Depends on the chain, again, because we have stablecoins on Tron, Ethereum, and so on. But for example, Liquid, that it would be the most Bitcoiner chain for stablecoins.
Luna, I'm seeing 15% here, like to lend. I can just click it right now and just lend out at 15%.
Yeah, but for high amounts, no? I was checking yesterday, maybe something has changed.
Yeah, 25,000, yeah.
Yeah, 25,000. That is the maximum, by the way, that you can do on HODL,
Yeah.
Not Debifi.
We can do 100, but yeah, we have an exception.
Okay. So, okay, you do you. But for all the other people, 25K is the maximum, and you can land it right away for 15% in Ethereum or 14% it was yesterday on Liquid. Maybe something changed. So that's with a waiting.
There's also like one more information, like maybe like not many people are going to care about it, but some will. I think very soon Hodl Hodl is going to be implementing a minimum size for the loan of $1,000. That's because of transaction fees on Bitcoin. Like they have to, like the platform itself is not going to be making money with smaller loans. So yeah, nothing smaller than $1,000 soon, as far as I know.
And maybe just one last question that with this conversation it came up. Do you arbitrage between chains? Because it's sometimes interesting to see that Liquid has higher rates, Liquid stablecoin. So USDT on Liquid, as far as I've seen, has higher rates, but then on Ethereum is cheaper. You can borrow cheaper. Do you use that information, this difference between chains, to arbitrage in a way or not?
No, because like when you start, like say even going to Aave and borrowing at 7% or whatever, and then you might lend it out on Hodl Hodl for 16 or 20 or whatever. Even then, even that is not going to be worth your time. Like even this kind of arbitrage, because both of these loans are going to be over collateralized. So you're, yes, in terms of percentage points, the arbitrage is significant. But when you take one collateral into the question, then the second one again, like suddenly you're cutting into the amounts themselves significantly, and you're going to be left with single points of percent in arbitrage. But you have to do a bunch of transactions to get there. Those transaction costs are going to be eating into your profit margin significantly. So like doing yield arbitrage here, it just doesn't make sense right now. When you compare Ethereum USDT or a Liquid USDT, we kind of don't care because we have like this hot wallet on an exchange, and we just withdraw from a different blockchain to the wallet of the borrower. So those costs are on the exchange side, and we just don't care about it.
So you are agnostic fully as a professional investor in peer-to-peer loan. You're agnostic in the chain. It's not that you use always Liquid USDT. No, it doesn't matter. You probably...
I mean, Tron is fully centralized, utter piece of shit garbage, but it's still doing a lot of volume. So who am I to argue, you know?
Yeah, markets wants it, so you just give it.
Yeah, like I wouldn't be using Tron myself for any type of use case, but it is used a lot in like internet business, right? Like it's the most used stablecoin. Like USDT on Tron is the most used stablecoin, period. And on Hodl Hodl, a lot of people, because of how interconnected Hodl Hodl is with the projects and exchanges using Liquid USDT is a lot of the volume there.
Yes.
So we have to have an account with an exchange that can accept Liquid USDT.
Bitfinex.
Yeah, or Bitsy, for example, or others. But yeah.
Interesting.
Yeah, but with Bitsy, like Bitsy customer support has been degrading throughout the years, so I wouldn't recommend it. But yeah, Bitfinex is a very good option.
Great. Ambroid, I think I ran out of questions. I think we have covered a lot. It was supposed to be shorter episode, but I was enjoying so much. So
thank you very much. That's what happens with me, man.
No, it's amazing. So thank you very much for sharing your experience in the peer-to-peer lending market. And yeah, hope to see you again in Riga in a few months.
Absolutely, man. I'll be there.
And that's it for this podcast that I can say it already has made an impact on the market. Whether big or small, time will tell, but reality is that lender offers on the Lend platform have increased by over 200%, while borrower demand has dried up, a clear sign that lenders are snapping up the available offers. This is the beauty of competition and the free market, and it's amazing to witness this parallel financial institution enabled by Bitcoin in real time. I will leave it here. It's a pleasure to greet my English-speaking audience. Sorry for my broken English, but it's a pleasure nevertheless. And if you enjoyed this kind of content in Shakespeare's language and want me to do more of it, let me know with a value for value contribution or in the comments below. It will be of great help in taking on the challenge of English language podcast. Talk soon. Thank you for listening.